Let me wait till the top of the hour to maintain my integrity. I want to start early. Hope everybody had a good weekend. 7 o'clock. All right. Welcome to Sniper's live trading and coaching. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Let's do a market update. Lots and lots is going on. Some news to really get behind is FedEx last week tanked big on an earnings warning citing a lowered global demand for shipping. Now, when a bellwether like FedEx pre-announces their earnings is coming up on Thursday, they pre-announced, and that's considered a bellwether. Well, an American staple company, one of the bigger American companies, very, very stable company. When it comes out and warns pre-earnings, hey, our earnings are going to suck. Here's why. Nobody's shipping product packages. Well, people are, but a lot less people are shipping packages than before. So FedEx tanks, the market went with it. And then, of course, as you all know by now, Fed Chair Powell will raise rates 2 p.m. on Wednesday. How much? It's speculated somewhere between 75 basis points or 100 basis points. That seems to be where most are leaning, particularly after the FedEx warning. So we're looking at potentially a 100 basis point or a 1% interest rate hike. Key to the announcement will be how Powell frames inflation going forward, and nothing has changed. In fact, it's probably gotten worse after his Friday 10 a.m. speech where he said, expect pain, U.S. economy going forward. So that is what is up. Now, with this meeting on Wednesday, this announcement, the markets could move either way. So that's the thing we got to worry about. He could frame something in a way that's considered less dire or worse. Anything's possible. So we've just got to assume for now anyway, that there's volatility potentially on Wednesday, and we don't know which way. To be really straight, we don't know which way the market will go after the announcement. It might go sideways. Yeah, we know all this, same thing. Or it might gap one way or the other. So that's a possibility. That's something you got to keep your eye on when you're trading, right? So we're going to sort of like maybe sit on the sidelines a little bit till Wednesday. We're going to be very careful with any opportunities that we investigate today. I found this really good article on Thinkorswim, and let me see if I can find it again. This is under ES. I was just reading this last night. I was looking at the futures. The futures were actually a little bit up last night when I went to bed, and now they're down. We'll look at these in a minute, but let me find there it is. Here's a really cool. I tell you what I'll do here is I'll cut and paste this and put it in hedge fund, the hedge fund board. We're not going to use snipers anymore. One of the other things that we wanted to accomplish by consolidating snipers in hedge fund was less boards, So you have earnings now and you have hedge funds. So, but anyway, this does a really nice objective view of what the FedEx stock plunge and why it's so bad for the whole market. And I'm going to say all of this in a minute, but I'll post this in the WhatsApp thread if I can grab it, and then you can read this at your leisure. It's a really well written thing. It was one of the better news blurbs I've seen on Thinkorswim's news. So let me go ahead and post that real quick here. Where are we? Oh, that's the wrong one. That's my personal one. All right. So I'm going to post that real quick, and then we are going to keep talking, because basically what I'm seeing right now is something like this. This is what it feels like. And FedEx is the reason that it feels like the market has further downside to go. Chicken Little, the sky's falling. And that's good. That's really good for us. And we're going to profit on this. We're going to take advantage of it to get a feel for the markets before we open here in about 25 minutes. Is we're going to take a look at the futures. Here's a slide here just to remind you the symbols. I have all but one of these symbols is loaded in Thinkorswim, so I can just move through them. The ETFs are not going to be accurate until 9:30, so we'll maybe take another look then. And of course, we have the cash settle indices if we want to look at the markets that way. You can look at these four markets in four different ways, as you know. So let's take a look. Let's just see what's up. What is the what's so in the markets? Let's start with the S&P 500, the E-minis /ES. And I tell you, this pattern, let me zoom in a little bit here. This pattern here, this hammer pattern on above average volume, oftentimes will lead to further upside. The futures were down a little bit last night, and now they're down more. We have now, if this holds, we've got 3,900 resistance, which corresponds to 390 on the SPYs. Looks like, obviously we're setting new lows. Where are we going? Where are we going? Well, just pick your next support level, 3,800, 3,700. And I would say a good, I was going to say bet. I'm not supposed to say the word bet. It's the SEC doesn't allow us to do that. There's a good possibility that further lows are going to happen. I mean, we've got our low here was 36.39 on the S&P 500, and we could go lower than that. So, and again, if you take a look at the SPYs, I want to show you a clear chart of the volume. So the volume speaks volumes, pun intended. Take a look at the SPYs here. I'm going to come back to FedEx here in a minute. Let's just take a look at the SPYs and the volume. Forget about this stuff up top. But my God, come on. See those red bars, those institutional conviction bars? High, I mean, red volume. It's clear. 1, 2, 3, 4, 5, 6 distribution days where the red volume, the down day volume was higher than it spiked up. All right, so that's distribution. 1, 2, 3, 4, 5, 6, arguably 6 distribution days over the last couple of weeks. When those distribution days line up, further downside typically occurs. So all of it is pointing to further downside from here. All right, let's take a look at some of the other markets. I'll take a quick look at the NASDAQ. Here's the /NQ, same pattern. Oh, let me back up. I meant to say this one thing. So did I say it? I said it. This hammer pattern looks like it's going to fail today. Sometimes they do fail. The NASDAQ, same pattern. We're going to see the same pattern across the board. NASDAQ's got further downside, it appears. Russell 2000. These are the small cap stocks. Same pattern. Same pattern, same pattern, same pattern. /YM is the Dow. Yeah, it's just a beautiful thing, unless you want stocks. All right, so there is the the four corners of the stock market. Now the VIX, surprisingly to me, the VIX isn't higher. So this is the VIX futures. And then we also have the VIX, but this is the VIX isn't being calculated until 9:30. But look, the VIX, the futures for the VIX is up a little bit, but it seems to have some pretty strong resistance right up here around 27. And so when that happens, when the market expects, when traders expect the market to tank further, the VIX rises. The VIX futures really haven't that much. So what does that mean? That means that that lessens the probability that the market is going to tank further. But we'll see. I think further downside is still likely, but we'll keep an eye there. Let's take a look at the actual VIX, the VIX, and it's up a little bit. Okay, so we'll see what happens with the VIX when we open here. Let's take a look at oil. Oil is dropping. Anybody got an idea why oil is dropping? Let's just do a quick poll here. Anybody got any ideas? Why is oil dropping? How do you explain it?
More production.
Production?
Yeah.
That certainly impacts. But think about FedEx's earnings announcement. What did FedEx say? A demand thing.
Recession and smaller demand.
Smaller demand, yeah. Smaller demand. People are not spending as much money. They're not driving as much. FedEx isn't flying their planes as much. You know, all of that points to further downside in oil. So we got a bearish prognosis on oil, and Peter, you called this about 2 weeks ago. You were expecting oil to drop, and in this case, you were correct, sir.
Just follow seasonality.
Yeah, seasonality, that's part of it as well. So here's the USO. When we have a pair of broken wing butterflies, a bull and a bear, and if you're in a hedge fund, fold, we're going to make money on USO on one of those, probably the bearish one looks like. So this will drop when it opens. So oil's down. Let's take a look at the UUP. I don't have, excuse me, I don't have Forex on my Thinkorswim account, so I can't look at the dollar futures, but US dollar.
Mike, your screen.
Oh, thank you. I need to go to bed earlier on Sunday nights. Yeah, the UUP is, obviously getting stronger. That's because the interest rates are rising, and has every reason to get even hotter from here till the meeting on Wednesday with interest rates rising. So the US dollar is up. Let's look at gold. /GC is the gold futures. Gold is down. Gold's down. I thought 1700 would hold. It did not. US dollar getting stronger. Expect gold to get weaker still. Given that gold is down today, I would anticipate that the US dollar has gotten stronger. The US dollar futures are stronger. I don't have visibility. I can't see them. We can take a look at the UP once the market opens here coming up. So there we go there. Bitcoin is taking a hit as well. I don't know, man. People say Bitcoin's going back up. I don't see it. I don't see any evidence of that. It's certainly not a risk off asset anymore like we had been in the past. It's pretty much just moving with the market at the moment. So stocks like Bitto and what's the other one? Block. There's a handful of Bitcoin and crypto ETFs we could sell credit spreads against as well. So that's a potential opportunity for today. What else do I have here? That's pretty much it. Silver is going to be in the same boat as gold. Silver is not coming down like gold is, though. All right, so we might do something there. Bonds. I forgot to talk about bonds. Bonds are a drop-in. No sign of risk off, meaning money's flowing into bonds. That'll happen eventually, especially if the market really starts tanking. Possibly that happens further this week. But you know, bearish credit spreads on bonds makes sense. Let's talk about FedEx real quick. Now, I was looking at FedEx last night. Let's talk about FedEx. FedEx tanked. Let me check FedEx's current posture pre-market. FedEx. Let's take a look here. All right. Massive correction. The stock closed at 161 on Friday. Pre-market, it's right around 161. Looks like we're going to open sideways. This is a hammer pattern, which I keep talking about. That's a beautiful example of one of the most, I'd have to say it's my favorite directional trigger, which is a hammer pattern on way above average volume. I mean, the volume on Friday was immense. I mean, there's average. What's that? 20 times average volume or 15? It's just a boatload of extra volume. Technically speaking, that points to higher highs. So that's like a slingshot pattern. The stock opened here, here, closed there, dropped all the way down here. The bulls took charge like a slingshot. We went from way down here to up here, closing higher than the open. And that usually propels the stock further upside. However, there is no evidence of it. FedEx is trading at 160 now to open. So I would expect FedEx to go sideways from here, despite this hammer pattern. We'll see what happens at the end of the day. So I was thinking, man, well, can we do something with this? Can we do something with this? What do you think? What could we do with it? Remember, earnings is coming on Thursday and the Fed speaks on Wednesday. So think through this for a sec. What do you think we could do to profit? Here's the prognosis on the stock. Sideways, potential gap on Thursday, IV rushing between now and Thursday. What could we do? What could we do? Any ideas?
Straddle.
Thursday. Yeah, that's really the only thing I can think of. Now, I even got into this like a calendar spread until Thursday would be like a straddle in that the IV rushes. The problem with the calendar spread, though, let me show you quickly. This is supposed to be basic, and what I'm about to tell you isn't. So I'm going to do it anyway. Here's the IV for FedEx. The IV will rise until the 22nd, which is Thursday. The IV should continue to rise. Although we have a lot of extra volume, movement here, the IV is already elevated due to the tanking that FedEx took on Friday. But really, the prognosis should be IV rises till Thursday, stock goes sideways till Thursday. A butterfly wouldn't work, would it? A butterfly would pop. The IV would rush in, and that would hurt a butterfly. But a calendar, let's duplicate this quickly. This could be a good paper trade if you want to dig into the impact of IV rush. Okay, now the tricky thing about a calendar is that you have two legs. You have a short leg. Where is it? There it is, way down here. You have a short leg and you have a long leg. So if I was to just quickly do a calendar spread search, and let me illustrate something to you here. Now, I wouldn't use these expirations. I'd use different ones. In fact, let's do it. So I want to be in this calendar spread. I'm going to take off on Thursday before the announcement because we could get a gap. And so because I know that, what I'd want to do is use the shortest term options available after the earnings announcement. That would be September 23. And then I would buy the next week out, which would be September 30. I tell you what, we haven't done much with calendar spreads, and I love them. I think they should be a hedge fund strategy, and we can use them as hedge funds. Similar to broken wing butterflies, we can use calendar spreads as well. Now, the difference with a calendar spread over a butterfly, which we could put on, is that Vega will actually help us as IV rushes between now and Thursday. IV will rush and we'll make money. A butterfly would have a negative Vega right there. So this is smart with respect to having time work for us, assuming the stock goes sideways till Thursday. The stock hangs out in this body of the butterfly or the calendar right here, and then time works for us between now and Thursday on 9/22. So let me show you what 9/22 would look like. This would be 1 day before expiration. Risk graph. And that's the potential profit on Thursday right there, which is great, which is 187% return on investment by Thursday. That's pretty awesome. But what's the problem then? What is the problem then? Any ideas? I'll give you a hint. Right here. So you have two legs here. You have the IV of the Friday leg, and you have the IV of next Friday's leg. And what you'll notice here is that one IV is bigger than the other. So the short-term IV, what could happen between now and Friday is the short-term IV spikes up a whole lot and not enough in the long leg. So this is the short leg, and this IV is already higher. Look here, it's spiked higher than the long-term IV. And so the problem there is that we call it an IV skew. If the IV rushes in the short too much, which is quite possible given FedEx's news and earnings coming up, the short IV leg could pop or crush the calendar spread. So that's a nuance that not a whole lot of people understand. And I was thinking, I looked at it last night, and I'm just not prepared for us to get, have our butterfly or our count. See, I do so many butterflies. I say butterfly a lot, just without even thinking. But here's I can illustrate it here, right here. So what I'm going to do now is illustrate.
Hey, Mike.
Yeah, buddy.
Do you remember when we were watching McDonald's? No, not McDonald's. Walmart, when they announced pre-earnings, all that stuff, they tanked down and then they moved up. Could that be possible? Similar scenario?
Yeah, it could be. Very well could be. I wouldn't expect FedEx to drop any further. They've already been taken behind the woodshed and beaten severely. So yeah, I would say that's the good chance of FedEx sideways to up into earnings and maybe a non-event after, given that they've already pre-announced. But let me illustrate this idea. So you have negative vega in the short option, and then you have positive vega in the long option. That makes sense. The vega in the long option is bigger, but here's the problem. If the IV rushes 200 here and maybe only gets 75 here, I'm just guessing, then what happens is you get crushed. So the IV in the short option crushes, and then your calendar spread turns into that. Okay, that's probably more than you wanted for this time of the day and the week, but a calendar now just doesn't make sense. It really doesn't make sense at all to throw on a calendar of the days preceding, maybe 2 weeks even preceding an earnings announcement. So we can't do a calendar. And as most of you pointed out, really the only strategy that makes any sense is a calendar spread. I'm sorry, a straddle. Now, if I go into the Tom's optimal red wave scanner, and let's just see over the last 2 earnings periods what FedEx does. Does it satisfy the criteria? Does it make sense to put on a FedEx calendar? Not historically, no. It's not a winning proposition. So I don't see one there that we have any historic backing. And so really there's nothing we can do much with FedEx other than maybe sell a way out of the money short call spread, but we know what happened with Walmart, as Peter's pointing out. So I don't really see much that we can do with FedEx at the moment. I mean, the only thing that makes sense is a Friday straddle, but then you have theta. I mean, we could build it. We could right now just build it and see, but we don't have any history behind us. Let's go to options, option chains, FedEx, Friday expiration. And if we were to buy a straddle, we can take a look here. I'm going to do a strangle here. I'm going to buy the 160 put and the 162.50 call. The stock's right in the middle. So it's the same thing. It's certainly until Thursday when we'd exit, it's the same kind of risk graph. It's just that the options are split, making it a strangle. So there you go. That's the deal. The theta is quite large. So $81 a day. Our Vega, we need IV to rush to offset theta. We got to have what, about 5 times the IV percentage rise to offset 1 day of theta. So quite risky. We don't know what IV is going to do. Here's the IV actually dropped on Friday. That's really the only thing I can think of on FedEx that makes a whole lot of sense. Other than an out of the money call spread, we could do an out of the money put spread as well, potentially on FedEx. My leaning is to wait until Thursday, Friday maybe, and then Friday consider a butterfly or out of the money butterfly, and just be patient. Any questions or comments on FedEx? Any other ideas on what we could do with FedEx? I'm gonna wait. I'm saying we wait till Friday and do something after earnings. Okay. So what do we do now? It's one of those weeks where we've got a lot of we got a big catalyst coming up on Wednesday, so we've got to be really careful. Now, here's something else we can look at. All right, you know, we got a bearish prognosis on the market. It's unlikely that Powell's going to come out and give us any positive news, especially after what FedEx just reported last week. So I think overall bearish posture in the markets for a lot of reasons: the interest rate environment, FedEx, and the fact that the markets are tanking on distribution days. So all of that points to further downside. So I think clearly what makes sense for us is to run the call credit spread scanner. All right, let's go into call credit spreads. Now, what do we run the call credit spreads against? Yeah, I could do the whole penny plus weekly stock list. I could do all optionables. But why don't we do this? Think about ETFs, REITs, and trusts. I also like index options. The idea here is, let's play a bearish market with index options that track the overall market, with ETFs, REITs, trusts, and optionable. So we'll start there. And I'm going to do long-term out of the money call credits. Oh, hold on. Let me pause for a sec. So we do have some trades in motion. I forgot to mention this. So we put on a QCOM long-term credit spread on Monday. That trade is performing quite well. Remember, this is in part due to the US's posture with China prohibiting chip sales or sales to China. I haven't heard China reciprocate yet, but we can count on that. And FedEx has dropped since. Not FedEx, Qualcomm. This trade is really in an exceptional place, 89.8% statistical probability of profit. So that one looks destined for a profit. We want to also, if you don't have this trade on, this GTC, be sure to place your GTC to buy this back for 10% of the original credit, which would be 13 cents in my fill. So you got to have a GTC out there to take these long-term credits off for 10% of your original credit. Why do we do that? Well, if you do that, then you will shorten your hold time by 50%. So instead of waiting 3 months, you'll end up waiting maybe 4 to 6 weeks. So it increases your ability to use your capital efficiently. So that's got to be there. Does anybody need help placing a GTC order to buy back a long-term credit spread for 10% of the original credit? Anybody need help with that? Don't be shy. Happy to do it. No?
Mike, yeah, if you'd run through it just once.
You got it. You got it. Okay. So I'm going to go into monitor in Thinkorswim. So I'm going to get to the place that you could also get to if you have a form-based platform like Schwab or any of the other ones. Let's see when we find my Qualcomm trade. Oh, did I get rid of it? Oh, darn it. I removed it. All right, here's how you do it. So here we have a 155, 165 call spread. All right, November 18 is the expiration. Now, ideally, what you do is you take your position, and I don't have, for some reason, I must have deleted the position when I was cleaning out my cupboard here. Let's just find one. All right, we're off. Let me pause and take a look and see what's up. I'm going to go right to the SPX, and let's see how this thing's opening up here. Yay. Baby. All right, we're dropping. We're dropping. Not surprising. FedEx, maybe they may not be open just yet. FedEx inside day right around 160. Likely that'll continue. After Thursday, we'll see what we want to do with it. Okay. Let me find a credit spread here. So here's how you do it. You go into your position statement and you find your trade. So this is an open trade. And I can see here on my fill prices, I got filled for $2.20. You see that? We sold for 10.30. We bought for 8.10. And so what you want to do in Thinkorswim anyway, what is that? That's 220. So in Thinkorswim, I highlight both legs. I got filled at $2.20. I want to create an order to buy it back for 22 cents. So I highlight both legs, create closing order, buy, and then change your GTC limit to 10 cents and make that, sorry, 22 cents, excuse me, 22 cents GTC. And we just hit that, by the way. This is a live trade we have on now. So this trade, this rut trade that we've been trading for a few months now, once was in a loss territory. We threw on some hedges. One of our hedges made money for us. And now this rut trade, which previously was a loss, is now captured for our 10% of original net credit. So there's the rut trade. If you're in that trade, you should be out by now. Now, if you don't have, let me build manually the order to buy this spread back for 10% of the original credit. Okay, this is Qualcomm. So I'm going to come in here. I'm going to use the option chains to build it. Qualcomm. Come on. What's up? There we go. November 18. Excuse me. Let me pull up this, make this single. So the legs we have.
Mike, excuse me. Speaking of the Qualcomm, I must miss that trade. Is it too late to look for that trade, or I might try to see if I can find any credit spread today?
Yeah, it might. We're not going to be able to get this one, but if you did, you'd have to sell closer, maybe here. We can look here in a minute. All right, let me finish what I was doing. So we're going to buy back the, you're welcome. We're going to buy back the 155 and we're going to sell the 165. All right. So if I'm in, I don't know where those yellow lines came from. It's a Zoom feature of some sort that I don't know how I turned it on. Sorry about that. Let me stop sharing and come back. Maybe that'll clear it up. There we go. Okay, we got it. All right. One more time. What we're doing is we're going to buy back the 155, sell the 165 for November 18. Okay, so here's the 155s. We want to buy those back. So I click the ask. The cursor will change to a buy. Look at the slippage at the beginning of the day here, 20 cents wide. Buy it back, click, and then sell the 165. Control. Click on the bid price, 165, currently 44 cents. And then I set up my good till cancel order. Make sure you got the right number of contracts, which is 1. And then again, I want to buy this back. I sold it for $1.34. So I want to buy it back for 13 cents. It's 10% of $1.34. You make this 13 GTC. All right. So that'll sit out there. And the instant we could buy the spread back for 13 cents, we're out. We'll cut our hold time in half and increase our overall APL month to month. That's really a critical rule. If you're using long-term credits, you must buy them back for 10%. Don't wait for another 10. Don't hold up. Let me show you why here. You got $866 of credit. Imagine that you had netted. You currently have $112 of profit, and you're waiting to collect another $22 of profit while holding 866 margin. So you're locking up that money in order to make another 10%. Makes no sense. Take it off, cut your hold time. You'd have to hold this all the way to expiration in order to get a full 15%. Don't do that. Take it off 10% of the original credit and go get another one. Okay, so that's how you do it in a form-based platform. You simply just build the platform, build your order so it looks remarkably like this. That's really it. All right, did that answer your question?
Thank you. Appreciate it.
Oh, you're welcome. That's what these are all about. All right, let's run a call credit spread searcher. If you like Qualcomm, actually, here's what we could do, Peter. I think it's too late. We're not going to get the same trade, but I created a list of chip stocks last week on Monday. And if you need me to populate those in the WhatsApp feed, I will. I already did last week, so it's already in there. Let's go after chip stocks again, hit search, see if there's anything else that's looking good on the list here. Yeah, all these look good. And from a probability perspective, from this one up, all of them around 80% or higher. And so from here, you want to take a look at the short strike, and then, which in this case is 185. And then I look at the pick here. Where's 185? It's right up here. So this is not a bad one either, Peter. Look, we could sell at 185.
Yeah,
and then,
sweet.
Yeah, I think it's good. And for us to get into trouble, the stock's going to have to close above 165. Above, these are also resistance
200
levels now.
moving average. Yeah, yeah, it
And
looks sweet.
then 50, and then so that's 2, 3, 170, 4, the 200, 5, 175, 6, 180, 7 resistance levels that this stock would have to breach in this market, in this global economy where demand is contracting for everything. And we have the battle between the US and China going on with doing business with China with chips. So there's a good one there. I'm not going to do another one because we already have them on. We already have Qualcomm on, but here's Qualcomm.
Thank you so much.
Oh, you're welcome. You're welcome. 145 is Qualcomm's short strike. Now, before we got 155, now we've got to come down here. That's too close. I would much rather do Texas Instruments now than Qualcomm. So if you're not in, let me just wrap this up in case some of you want to go after this one. I don't want to track 2 chip stocks. You got to, and another thing, everybody, you don't want to put multiple trades on the same stock in the same sector, I should say, 2 different stocks or more in the same sector, maybe 2, but you got to be careful. You know, if you lose on one, you'll lose on the others. So you want to definitely insulate and isolate across sectors. So I'm not going to do another one in this for our tracking, but if you're not in one, then here's one that I think makes some sense. Let me clean this up a little bit. And I want to put multiple strikes here because I like to contract, as you know. So let's edit this trade, and I'm going to lift up the upper strike. We're going to take less ROI, 195 risk graph. So instead of 19%, there's 15% right there. Probability of profit, 82%. Statistically speaking, and we have what I keep harping on. We have a very, dire market set of conditions, and chips are getting hammered because of politics. So there you go. Now, let me post this one. Gerardo, we're not quite ready with the discussion boards, right? I know we're not. All right, tomorrow we will be. I tell you what, I'm going to let you write that one down. I'm not using the sniper WhatsApp feed at the moment. We're not going to use that. We're going to be using the boards for snipers. This is going to be a general free hour of the week that anybody can come and talk trading. So, but there's the trade there, selling the November 18 185 call, buying the November 18 195 call. Let's see what we can get for it right now. Texas Instruments. Let's do the whole deal here, man. Okay. I'll get, you know what, I'll get filled and track it with a disclaimer. All right, just so I can go through the process of getting filled on one of these. So Texas Instruments, a really fast way to use Thinkorswim anyway, is to change the option chain to vertical. And then I go back and find my short strike, which is 185 for November 18. Let's find 185 right there. I need to change the upper strike, but I can start here, click there, and then lift up the upper strike down below to 195, and then we'll do one contract. And currently that's going for 127. Here, the entry credit on Friday was 133, probably because Texas Instruments is down a bit today. It's actually not, it's up a little bit. It's up a little bit. All right, so I'm gonna go ahead and put this in for $1.30 trade. It's at 127. Here's something about the markets when they open, and especially if there's some bearishness in the air, and there is, slippages widen in the morning. It's like a school of fish feeding, and you can drop a hook in the water without any bait on it and perhaps catch a fish. So I get pretty aggressive in the morning, in the first, let's say 30 minutes to an hour, you know, ask for a bit more. Let me change this to $1.30. Mid price is $1.25. I'm going to stick this in for $1.30. I'm going to click send, and we're going to let that sit out there, and we got it. See that? The mid price was $1.27. Feeding frenzy. Boom, we got an extra 3 cents. So this one we got filled. Let's look at the exact fill prices here. We got filled at 198 and 68. Okay, I'm going to plug those in here. 198 and 68. And then I'm going to put a disclaimer. Just track. All right, and this is going to be a bear call. Long-term bull call spread. All right, now that we've gotten filled for $1.30 in Thinkorswim's simulated platform, you might not get $1.30, maybe it's $1.28 or something, but I would put an order in for $1.30, maybe higher because we got filled immediately, and see if you can get a bit extra credit. Okay, so we got filled for $1.30. I've saved it in Sniper Live. That's this portfolio. And now what I want to do is set a GTC to buy it back for, guess how much? 13 cents. We sold for $1.30. Move the decimal place point over 1, and that gives us 13 cents. So let's set up our GTC on this one. On Texas Instruments, there it is. We now have a position on Texas Instruments. And then I highlight both legs, click, control click, right click, create closing order. And you don't have to worry about any of this here. That's correct. And then you make your buyback price 13 cents, good till cancel. Confirm and send, verify, send. And now under monitor, there's our good till cancel order to buy this spread back. The instant it's worth 13 cents. Okay, so there you go. There's a potential trade for you to paper trade. But now let's go take a look at ETFs. ETFs, you know, there's a lot to be said for only using ETFs on these credit spreads. Anybody know why? What's the advantage using ETFs, REITs, trusts that are optional?
Small move, they don't gap that much.
Partly.
The
There's why don't they
prices
gap so much?
because they involve several stocks, not just the one, and so it usually does not have that huge price movement.
Yeah, the price movement is mitigated, let's say, but
They're
the
following
really
the trend.
Liquidity.
yeah, liquidity is good. They don't have earnings.
No earnings.
They don't have no earnings. That's the real reason, and for that reason, Peter, you don't see as many gaps. And that's the thing we are mostly concerned about is the stock gapping at earnings. So I'm going to do a search on ETFs, REITs, and trusts, and let's see what's out there. Now, I think any market index, IWM, SPY, DIA, any of those would be really nice looking credit spreads. Okay, so here's the semiconductors. Let's take a look at this one. This is 235. Now, we already have a Texas Instrument trade on, officially a Qualcomm trade, unofficially a Texas Instrument trade, which are in this sector. But just to look at it, 235 is the short strike. And then I want to take a look at 235 on my chart. And is anybody excited about selling a credit spread right here? That would get where you would lose if the stock returned to this level here? I'm not in this market. There's plenty of other better trades. So that's too close. If we could get one up here at 250, maybe. But we also have Qualcomm. If you're not in Qualcomm, this could be a good place for you to look for your own out of the money call credit spreads. But I just think 235 is too close. The stock was there a month ago. Here, good. There's no premium there at the moment, though. Here's reverse bonds. Now, remember, the scanner does not do any directional analysis. When I did the hedge fund course, I got a lot of questions. Well, how come the scanner's giving me a bearish trade on this stock that is really going hard up? Well, the answer is it doesn't check. Statistically speaking, though, you do have an 80% chance that this stock, well, let's sit right here, 82% chance that this stock isn't going to reach 34. It's going to be below 34. And that's even off the charts here. But no, I'm not jumping in front of that moving train. We're not taking that one. So you got to do your own directional analysis. Here's one on the IWM, which is the Russell 2000. We also have one on the Qs down here. The Qs is only 78% statistical probability of profit. So the IWM makes some kind of sense. Now that we're out of the rut trade, we can consider this one. Let's take a look at it. 197 is the short strike. That's our line in the sand. All right. We want the stock to be below 197 between now and November the 18th. That's what we want to happen. Statistically, we have an 80% chance of that happening. It's even better than that if the markets continue to plummet with the complexion of the market. Let's get a mute there, Gerardo. Thank you, buddy. All right. So we got one. Can we get a mute? We got 197 right there. The stock's at 178.90. Let's pull up pick 3. I'm looking at 197. That's my line in the sand. Pick 3, 197 is above the 200-day average. All right, I like that. You know, the reason I like it is that's a super strong resistance level. It eventually held on the IWM back here, coinciding with our temporary loss on our rut credit spread. But for us to get into trouble now, the IWM is going to have to breach 180. That's one resistance level. 185, 2 resistance levels. The 50-day average, 3. 194, 200, 5. 195, 6. And then we get to 197. So I'm liking this. I am liking this one. Let's go get it. And if anybody has other opinions, please let me know. We also have 22% potential return on investment. So what could I do with that? Do I want 22%, or would I rather have higher statistical probability of profit? There's not a right answer. For me, that was rhetorical, that question. For me, I would rather take less return on investment for higher probability of profit. Okay, so let's do that. I'm going to take the trade. The way I took the trade is I clicked these links here, and then I'm going to copy the trade, duplicate it, duplicate, and then I'll edit. So let's play. Where could we sell? Let's take a look at the IWM on a live chart here. We don't have live data for 10 minutes on Tom's tools. Where would you like to sell? Here's where I'd like to sell. We can sell right here at 197 right now, but what about 200? That corresponds to 2000 on the rut. So that's higher, more room for profit with a higher statistical probability of profit. So what I'm going to do here is just see if I sold the 200 and I bought the 202, what do I get? There we go. No brainer. Now we, instead of 22%, almost 23% at 80% probability of profit, the other option is to take less, 16%, with a probability of profit of 83.5%. 3.5, about 3% more statistical probability of profit. And to get that, we sacrifice maybe 6% ROI. I would take that one all day long. This is the one that I'm after. Let's size this up to 500 bucks. So what can I do? 3, 4, I couldn't do 3. So I'm using that number there. I'm dividing that into 500, and that's going to be roughly 3 risk graph. Now, I don't know what I'm going to be able to get right now, but there's $500 of risk if we get 28 cents. So now I'm going to go after this one. Let's go to trade. Expiration November 18. Sell the 200, buy the 202 calls. There's November 18. We're going to sell the 200s, which are right here. Click the bid, and it's also got our correct strike 202. So we'll need to this when I select vertical here, it gives consecutive strikes. So we got 199, 200, and then 200, 202. There's not a 201 in there, which tells me that most likely there isn't a 201. So I can edit the trade here. And then you can look in Tom's tools. And surprisingly, let's find it, November 18, excuse me. So let's find our 200, which is right here. Yeah, look there, there's not a 201. So I'll need to lift up this upper strike to 203 to give myself any ability to contract. So I'll make this 203. Let's hit risk graph. Now my risk goes up because it's a wider spread, it's more risk per spread. So I could only do 2 now. It's going to be slightly over 500 bucks. Okay, so that's going to give us 40 cents, one less contract, but wider, still right around 15, 16% probability of profit, almost 84%. Good looking setup. So I'll come down here, change this to 203. So this is now matching up, 41 cent credit. Not higher than it was on Friday. Here's the trade. Sell 2, November 18, 200 calls on the IWM. And then buy 2 of the 203 calls above Mid price is 40. Guess what? I'm going to ask for more. Let's see if I can get 45. This is something you want to do with your broker's platform. A few cents here and there can pay for commissions, you know? So I'm going to ask for 45, even though the mid price right there is 41 cents. Confirm and send. Verify. It is correct. Send. We didn't get filled. That's okay. I'm going to back down this credit until we get filled. I'll do it a penny at a time. So in Thinkorswim, the way you do this is you cancel and replace. So I'll put my line right here, my cursor right there, and then this little nondescript button here. If you don't know how to use, if you're in Thinkorswim for the first time, there's no way you'd be able to use it. Because I mean, how would you know what was what? There's plenty of videos, and then you've got me, and I've been using this for 20 plus years, so I know how to use it. But in the beginning, I didn't. So mid price is now 41 cents. I'm going to cancel replace. Click that button right there. Cancel replace, and let's just drop it down a penny. We're going to fish. May I have 44 cents, please? No, you may not. Okay. Well, how about cancel replace? How about 43 cents, please? And I could leave this. We'll get filled at 43 probably, but confirm and send. Monitor, not quite yet. Now you would most likely be filled on this by the end of the day, unless IWM tanks. It doesn't seem like it's doing that. And let's drop it to 42 cents. Confirm and send, monitor. Not yet, not quite yet. Now, 1 cent on is not a lot, you know, so don't get too crazy. Just kind of walk it down until you get a fill. All right, I'm going to take it to 41 cents and let it sit, and we'll get that. Got it. And then we got filled at 43. Thinkorswim does that, by the way. It gives you better fills sometimes. So we just got filled at 43 cents. 146, 103 are our fill prices. So there's our 200 call at 146. And there's our 203 call at 103. 146, 103. This is now filled. And this is a long-term air call spread. Save it. That's in Snipers Live. There we go. That's our fill. Potential 16.73% ROI. And our probability of profit on this bad boy is 83.7% in a market where the sky seems to be falling. So now what we have on the board are these trades. So I've run my performance report. Our Qualcomm trade is doing great. Don't worry about the incidental P&L for today. Time has to come out for these trades to make any kind of money. Okay, that's the main stuff I wanted to cover today. Big week, big week. Keep an eye on the Fed on Wednesday at 2 p.m. Andrew says, I'm seeing the ask price drop each time you drop the order. Yeah, that can happen. Absolutely. So, all right, everybody, let's pause for a sec. Let's take a look at the markets. What is happening? What's actually happening? I want to see let's just go back to the ETF SPYs. What's the SPYs doing? Huh.
Mike, 1 second.
Yeah.
Keegan, come over here. It's my son, Keegan.
Oh, let me see.
Everybody. Where are we? Is right here. So we're
Hey,
in
Keegan.
Hi,
how's it going?
we're in Victoria, British Columbia, and he's keen to he'll be joining the group as soon as he can. So there you go. So we'll see his face sooner or later.
Keenan, I don't know if you know this, but your dad is an exceptional trader. So you got,
Well,
he wishes.
I gotta follow in some footsteps, I think, and save up and join you fellas here.
yeah, Keenan, welcome. Do you live in Victoria?
Yeah, we Gulf Islands.
Oh my God, it's beautiful.
Yeah,
there, man.
we're on the ocean here.
Yeah.
So It's pretty nice.
Oh man, beautiful. Well, Keenan, welcome. Come anytime, man.
Cheers, you
Great
bet.
to have you.
Absolutely. Good luck
All
today.
right.
Thanks for
Pura
that,
vida.
guys.
Thank you, guys. All right. Thanks for that, Paul. That was nice. How old is Keenan?
35, 34.
All right. That's about when I started learning to trade. All
And-
right. Yeah, go ahead.
Well, and he's probably made one or two mistakes the way you did too. So he's getting, he needs us.
He blew away $500,000 in 2000.
Yeah, not quite. All right, thank
Oh
you.
my gosh, you're welcome, man. Thank you for introducing him to us. That's great. All right, so we're kind of holding in there. We opened here. We're making a bit of a run. I like to also look at the short-term charts, which are to me are interesting. So for the first 30 minutes of the day, this is how the markets have behaved. This is a minute bar. So anyway, I think sideways, deer in the headlights till Wednesday is most likely what will happen. But of course, anything can happen. Let's also take a look at the VIX. I'm curious about the VIX. This can be used as a directional index to give us some idea what is expected. And so the VIX is actually the average at the money implied volatility for the S&P 500 options. And you can see we're a little higher, but I'm not seeing any of this yet. And so if the markets continue to drop, expect the VIX to rise. There's another potential opportunity that I was looking at for today is call where the UVXY might be going between now and Thursday or Wednesday at 2 p.m. I like the idea of a put spread on the UVXY, a short one, calling the bottom. But the issue with the UVXY, you got to be careful when you sell bullish credit spreads, meaning that you need the stock to stay above a certain point. Maybe we sell an 8 put spread down here. And the only way you get in trouble is if the UVXY, which is the short-term VIX, drops. Now, the way that would happen is if the markets went up big and fast, you'd see the UVXY drop. The other thing, though, to watch out for, perhaps more importantly, is if I do a max chart, that's not useful. I've said this before, but the VIX instruments have what's called contango, and I can't see it on these weekly bars. I'll have to just use a 3-year. And so what happens is you'll notice that this isn't correlated with the VIX, because what happens on this instrument is, although it does short term, it moves well with the VIX over maybe a month. But if you go longer than a month, this thing called contango kicks in, meaning that there's a constant downward effect on the UVXY. Do not place long-term credit spreads on the UVXY unless they're bears, because you will, and I learned this from doing it. I sold a long-term put credit spread on the VXX about 15 years ago, thinking, not knowing about contango at that point. Oh, it was 20 years, whenever it was, 20 years ago. And I got hammered on a trade where I thought it was a no-brainer, and it wasn't, because this thing will keep dropping. That's the point. Good for a week, 2 weeks, maybe a month, but be careful. All right, so that's what I got for today. Let's pause and let me share. I got something in the chat box. Yeah, John, I agree. It's nice to have younger people involved in trading. They tend to do better than some of us at my age, anyway. All right, what other things are you looking at? Any questions you have? Anything you want out of snipers going forward? Most everybody here has been in the first snipers where we did a lot of credit spreads, so I'm kind of continuing that thread, but we'll get into other, perhaps even more basic opportunities. I also look for earnings straddles and puts. I didn't see any for today. That would be a good call as well.
Do you like a short-term credit spread?
I used to, yeah, I used to. That's what I did mostly was short term. It's like, it's more like a gunfight, because you'll win on most of them, but when you lose it, you'll take a big hit.
Yeah.
You'll take a big hit.
Mike, it seems that most of your trades are paper trades, but then you do some live trades. How do you distinguish between those, or how do we distinguish between those that you're placing?
Yeah, everything that I've placed, I would say, is a live case study. And I say paper trade. I'm not going to suggest that anybody risks real money. It's up to you to decide when to do that, and I can help you make that choice. But I'm not going to recommend that anybody risk real money. I can't really do that. It puts me in a big liability spot that none of us put ourselves in, because in the States it's very dangerous to do that. But everything I've been covering here are live case studies. Yeah. And how do I distinguish it? Like I just did. So the way I distinguish these as live trades is we did market analysis, intermarket analysis, in fact. And the general thing about the Texas Instruments trade and the Qualcomm trade last week is the sector's dropping. The government is fighting with China, limiting trade, hurting companies here in the States that aren't as free to sell to China, impacting their sales. So further downward impact. And Brent, these are the kind of things that you really can't do in a back test. So whatever you've done in a back test should conceivably get better, because we're actually doing live market analysis. So this sniper's call, the earnings live call, the hedge fund live call, though in those calls, we are distinguishing trades that are ones worth taking as a case study.
Okay, thank you.
Yeah, you're welcome. You're welcome. Gerardo, we got something coming up tomorrow. Do you want to say a few words about it?
Yeah, we are real excited. We finally have ready. The forum is ready. So tomorrow we're doing a live training to show to all of you how it works and how to sign up and how to set up everything. So it'll be a great day, new place to share ideas and
5 p.m., right? 5
Sorry?
p.m.
Yeah, 5 p.m.
Yes, sir.
Eastern. Yeah.
Eastern, yeah.
Correct.
Yep. All right. Well, for those of you in earnings, we'll see you this afternoon at 3 p.m. Eastern. We'll do some live earnings stuff. Maybe we'll do iron condors. I've already looked, but I'll see if I can find something. But we'll certainly analyze the trades that we have going on. With that, I'm going to close for today unless there's any last minute questions or comments.
Thank you.
All right. Have a good day, everybody.
Mike,
Thank
See
you.
you
See you
soon.
later.
Pura
Thank you.
vida.
take care.
Bye. Ciao.